Hello. Hello, everybody. It's Big Cheds. It is Saturday, February 26th, 2022. Heartfelt thank you to each and every one of you for taking a little bit of time out of your day to come and watch this video. Please do say hello. Let me know in the chat room if you can hear me. I want to make sure everything's cool here with the audio before I get things rolling. Looks like everybody can say I can hear you just fine. Perfect timing. Hi from Portugal. Hi from Bulgaria. Folks, this is a worldwide thing. Please let me know where you are in the world. Step out and say hello. Really appreciate all the support. I love the fact that I can kind of do this at any time. I can just reach out and talk to you folks. Hello from Guatemala, Northern Ireland. All right. We have a really, really great guest today. His name is Trader Mayne. This is part of the let's get this up here on the screen. This is part of the long form interview series. If you go to my YouTube channel, go to the long form interview series. This is the newest installment. This is number 6. These are unscripted conversations with the folks that I consider to be some of the brightest minds in the space, people who really know what they're doing, people who are really smart. And I kind of like to see where the conversation takes us. And in that process, there's a lot of free alpha. There's a lot of good information, for you, the viewing audience. So really excited about that. On my YouTube channel, as well, I want to point out the educational live streams. If you're really new to technical analysis, or even if you're not, check those out. They'll really help you get started in terms of how to set up the chart, how to understand momentum, how to structure your trade, as well. And of course, I am the author of Trading Wisdom, 50 lessons every trader should know. The support's been unbelievable for that. So, thank you for that. I'm doing the book for free, the whole thing for free. I have 12 of the 50 lessons. I'll eventually have the whole book for free for you. Check that out. Of course, you can buy the book if you'd like to. It is on Amazon, Kindle, hardcover, paperback, and audiobook. Look at the ratings. I mean, that's ridiculous. So people are loving this book. I'm incredibly proud of that fact. I'm, of course, on Twitter at Big Cheds, academic observations about price, trading psychology. And if you're serious about learning how to trade, if you're serious about technical analysis, please do check out Bitcoin.live, where I am a founding member. I've been doing twice a week updates for almost 4 years. It's something I take incredibly seriously. And I'm just part of the team as well. You get access to everyone's content. It's something I'm really, really proud of. So definitely encourage you to check that out. Our guest is Trader Mayne. You can find him on Twitter at Trader Mayne. I'll have the links. I'll have links in the video description for you to check that out. And of course, he has a YouTube as well. He is Trader Mayne on YouTube. I'll have all that stuff linked in the description. I'm going to do a very, very brief analysis on Bitcoin. And then we're going to roll right into our guest. He should be ready here in just a few moments. I'm just going to check in with the chat room, everybody, real quick. Seems like everyone is doing okay. UK, London. From Malta, that's fantastic. Portugal, Italy, Ukraine. I hope you're staying safe, my friend. Definitely thoughts are with you. Germany, Lithuania. Look at all that. Canada, Mexico, Algeria, Austria, Wisconsin. So this is great. It's a worldwide thing. Definitely appreciate each and every one of you. So I'm going to roll right into, like I said, I'm going to roll right into a little bit of Bitcoin analysis here, folks. The chat room is moving quick. I probably will miss your questions, but throughout the course of the interview, I will be monitoring it the best I can, and I'll try to pass those questions along to our guest. So what do we think is going on here with Bitcoin? I haven't really done a public video on BTC in a couple of weeks. I've been focusing on the BCL Bitcoin Live analysis. But for my my last public videos, I really stressed to you how important that 40K level was. And I talked about the idea that if you believed we were doing a bullish reversal here, vis-a-vis some type of an inverted head and shoulders, your invalidation level triggered when we drop below that 39.5 or 40K level. And what we can see after it found a little temporary bottom, look at that big dip below the lower Bollinger, and that nice response from the bulls. And look what happened. We had 4 underside rejections at that broken neck baseline. I'm sorry, at that broken right shoulder. So rejection 1, rejection 2, rejection 3, rejection 4. So what you want to think about is the fact that if you want to look for data points on a chart, and when the chart is continually rejecting at that level, it's telling you that that level is important. So we want to continue to focus on that. Now, we temporarily broke above that level and we came back below it, right? Rejected at the MA50 and rejected back below. So you can consider that to be an up thrust. When you have the price rejecting many times in a level and then it comes back up above, it comes back up below like that, that's like a false breakout. You definitely want to pay attention to that. Um, you know, bottom fishers, traders who really caught that dip on that was a pretty good flush. We had a really very big wide range volatility candle February 24th. Um, traders who bought that dip, they were looking to sell at 39.5, 40K. They kind of understood that that was the underside. Um, that was the underside of resistance, and it would make sense. Former support turned into resistance, and it would make sense that the price would reject there. Mayne, I don't see you, brother. I don't know if you can hear me, but I see you logged in. Let me know when you're ready to go, and I'll get you right there on the stream. So I'm just gonna slide this. Folks, just give me 1 second. I'm gonna slide that right over and just do one thing here. Off screen, so just have to bear with me one moment. Uno momento. You are in the waiting room. Says I'm ready. Okay. Don't see you. Okay. All right, so we're just gonna get started. We really have a great guest, and I'm really looking forward to kind of seeing what he has to say. So that's my sense right now. Look, we want to continue to watch that 40K level if you're not in it. I think you want to structure your risk and maybe go long, if and when we break back up above 40K. That's a nice level to use to structure your risk. If you break back up above 40K, you can say, well, I'm bullish as long as we're above. If it breaks up back below, you can say, I'm bearish below, that type of thing. In the meantime, where exactly is the support? Is it here on this most recent low? Is it on the low from January 24th? We're not quite sure yet. So we definitely, it's one of those situations where, in my opinion, the resistance is much better defined than the support. So I think what you need to do, and I've been very consistent about this, if you're looking to play kind of on a support retest, you probably want to structure your risk based on something called a spring. The opposite of this up thrust or the false bull break, we have the spring here, and we had a spring on this February 24th candle. It's a month, just a month after the last time we had this, high wave spinning top outside bar, as we had here as well on the 24th. During that session, we swept below the lows from February 22nd, and we came back up above. So we're now back up above that February 22nd low. So during this candle, you could have gone long on that spring, right? Otherwise, you're kind of just free falling as you're heading towards support, and it's not that well defined. So you really want to wait for a spring. It gives you something to work off of, a clear horizontal level. And really, that's just what I would say at this point. Is if you're going to try to buy a dip, I would wait for a spring. And if you really want to buy into momentum, watch for the recapture of that 40K level. I'm going to check real quick to see if we can hear Mayne. I don't see him visually. I'm just checking in with him though. So I may have to go back to my chart for a minute while he figures it out. But hey, what's up, buddy? I can hear you okay.
Oh, perfect. Oh, let's see. Is the camera not working?
Yeah, we got no camera at this moment.
It's just frozen on my face.
No, it's just black. We just got a black screen.
Oh, interesting. Yeah, like it's showing.
There we go. Now it's frozen on your face, but we see you, brother.
I wonder if I get rid of the green screen.
There we go.
There we go.
All right. Okay. What's going on, man?
I'm good, man. How are you?
I'm doing really well. I appreciate you taking the time to talk to me. I think the last time I had you was like 2 or 3 months ago. I had you on the Banter Show.
Yeah.
And those are like rushed. This is long form. I don't have any, agenda. I don't really have any questions, literally. I just want to just talk, man.
Cool.
So yeah, thanks for coming. Why don't you introduce yourself to the audience? I showed them your YouTube and your Twitter. If there's something I missed, let me know and I'll make sure to put it in the video later.
Awesome. Well, yeah, I'm Trader Mayne. I am a trader who lives in Canada. I've been in the crypto space since like 2013, 2014. I wouldn't say I knew what I was doing very early on. So a lot of times people ask me how long I've been trading.
Yeah.
I think it's a bit of a fib to say I've been trading since 2013 because I wouldn't call what I was doing in 2013, 2014, even the start of 2015 really trading. It was
Yeah.
more gambling and just kind of blowing a lot of money. But that's kind of how you learn sometimes. You got to kind of just
Yeah.
jump right into the fire and get burnt
Yeah.
a little bit. And then you start realizing, oh, losing money sucks. Maybe there's a rhyme to the reason and I better start learning it quick.
Yeah.
I would say since about 2016, I've been pretty actively trading markets, crypto, Forex, commodities, equities, um, on and off full time. I've been full time again for the last about 2 years. I'm an entrepreneur, so I have some other businesses that I run as well. But during this last bull run, I kind of put some of my businesses on the side and was like, okay, this is, time to pay attention in crypto. The beautiful thing about crypto is it's very cyclical, right? So, there's definitely times where it requires your full attention, and there's times where it's a little bit more boring and you don't have to be glued to your screen all day. I post on Twitter all day. As my account's grown, I think my alpha to noise ratio has skewed a little bit more to the noise side, but I think that's kind of just what happens as your account gets bigger. It becomes a lot harder to share charts and trade ideas when you have a couple 100,000 people following you,
Yeah.
because you can't keep everyone happy. I've got a Discord that I run. It's free, where I, post charts. I've got an education section in there, and I've got my YouTube as well. I've been really pushing the YouTube over the last 6+ months. It's something I've really enjoyed doing. I think this type of format, talking to people, is the best way to share. As opposed to, I can only fit, I'm not a good writer as is. So trying to get me to fit like a cohesive tweet together in 240 characters is hard. For me to be able to just kind of shoot the shit in video
Yep.
form, post videos, do live streams, that's my favorite way to interact with my audience. So really enjoy YouTube a lot. And just hanging out here, man, waiting to see. I think we're at a very interesting decision point in the market here, right? So, we're just below 40K. I kind of agree with what you're saying. I was watching you cover the charts here. I think it's a pretty straightforward bias level. Get above 40, 41K. I think we go a lot higher, and stay below there. And there's a good chance we dump a lot lower. So very interesting time in the market. And I think, we might see some resolution here in the next week or so.
So how do you, we can look at the chart and we can all agree on like a key level, like a 40K, a psychological level, and the prices keeps pinging it. So it's not just psychological. It's, it's supply, right? Keeps getting rejected there. How do you pair that? You talked about you trade equities. So I'd love to kind of get into that, how you're approaching equities, but how are you approaching Bitcoin kind of given what's going on with like the SPX, not even like what's going on with like Russia or inflation and stuff like that. How are you separating them? Is it all in one?
Yeah.
What are your
So
thoughts?
when I first got into crypto, I was kind of the mindset that crypto is its own asset basket, which it is in a sense, but it's its own asset basket. Um, it's going to do what it's going to do, right? It's not going to be reliant on gold or equities or anything like that. Like it's going to become this, its own currency, this own store of value, whatever it is. As I got a better understanding of markets, what I learned very quickly was that crypto acts as a risk asset, and it sits in that risk asset basket with equities. As a pretty close inverse correlation to the dollar index, the US dollar. And it has a pretty close correlation to the stock market. People love to post when crypto goes up and the SP goes down that the correlation's broken. And then when SP goes down and crypto goes down, the correlation is back on.
Yeah.
Correlation is not one-to-one. And it's also not something that you want to necessarily look at, on a low time frame. There can be periods where the markets are very much in lockstep. Go look at the COVID bottom. Both markets crashed within a few days of each other. V bottomed, and we're in lockstep on the way up. And there's periods where the correlation is very strong and it's a little bit weaker. But the way that I look at the correlation is more of a kind of a macro thing. Generally, when the stock market is making new highs and it's in a massive uptrend, crypto does very well. You can identify most of the bear markets in crypto by just looking at the S&P chart. One thing that I think is very interesting is that Bitcoin was created in 2009. You could argue that we've been in the greatest stock market, bull market of all time since about 2008 and 2009. We haven't really had a real recession since the recession in 2008. So there is a question to be had, what is going to happen if we go into a real recession? I wouldn't call that COVID crash a real recession, right? We dumped, we V-bottomed, we were back at new highs within weeks. So there is an interesting, dilemma. What are we going to see if we have an actual recession in the equities market? What's going to happen to crypto? Is that that's when I think the best argument for decorrelation happens, is when the real market goes into a recession. What happens to crypto? Because if you look at the monthly chart of the S&P 500, it's pretty much up only for the last 14 years. So very hard to kind of determine what's crypto going to act like when that environment on the macro no longer exists. So I do treat them as correlated assets. It doesn't mean one can't go up without the other, but I think the general trend has been, as long as the S&P has been going up, crypto's in a good spot.
So does that make you perhaps less risk averse here with Bitcoin? Like, even if we break over 40K, are you going to look at it suspiciously unless we see kind of some strength here back in tech and SPY and all that?
I think we can go above 40K and go to 60K and still go down.
Okay.
I don't think that we necessarily have to just make a new, we don't for me, I'm a trader, right? Like, yeah, making a new all-time high is awesome, but like, if we can go from 40 to 55,000 and I'm pretty confident on it, that's a payday for me. You know what I mean? I think something that I've learned over the previous cycles I've been a part of is I'm never going to make as much money as the guy who just buys early in the bull market and then manages to sell somewhere near the top and just holds and doesn't really do much. But I'm going to make more money on the way back down than that person's going to, because they're either going to be sitting on the sidelines or they're going to be watching that money they made on the way up slowly deteriorate if they didn't take any profit once we kind of have that blow off and pull back. I think it's very hard to outperform the market when it's trending straight up, right? I mean, if you look at when we broke 40K the first time, we went straight to 60.
Right.
And
ETF run up.
40K. Like, it's very hard to outperform that. But when the market is going up and down, even if it's in a macro downtrend, I'm really good at catching those legs. And that's kind of where I make my bank. Do I think we go to a new all-time high? I think it's very difficult to say. Like, I don't think the Ukraine situation gets better before it gets worse.
Okay.
It sounds like it's getting worse day by day. It sounds like, they're getting closer to the capital. I don't know how that affects the markets as a whole. I don't want to be like I'm not pro-war by any means. But generally, war has, the fact that the invasion's begun, people's argument is, okay, well, now risk is off the table. The bad news is already priced into the market. They've already invaded. So up only from here. I don't really like to try and make those kind of predictions. I'm a level to level guy. I think if we get above 40 to 45K, or 40 to 41K, I'm looking at 55. And then I'll make a decision from there. And if it looks like shit at 55, I'm going to short it. And it's as simple as that. I'm not trying to be like, okay, well, we got above 40, so it's got to go to new all-time high. I think a lot of the people who you see on Twitter who are always calling for new all-time lows or new all-time highs, or it's a clout thing, right? I'm guilty of it sometimes too, but people want to be able to retweet a tweet saying that they called it, right?
Yeah.
And then they'll bury the one that, said the opposite. So I'm more of like, okay, what's the next level of interest above this level? And how do I get involved in the trade to get there? Because someone telling me we're going to all-time high doesn't actually give me a trade. You know what I mean?
Yeah. That's a great point. I think you said a lot of things in there that we could kind of pull a lot of different threads there. I think as a trader, it sounds like you're looking for volatility. You're somewhat agnostic to like the story. It's really, you just want to kind of have an opportunity to make some money based on an overreaction. I think that's the proper approach. And I'd love to a little bit later dig down and share your screen, maybe not just quite yet, but you can kind of walk us through kind of how you approach a trade. Maybe before we get there though, maybe let's back up a little bit. You talked about when you started trading and it was gambling, right? You just started trading. What were like some of the things you were doing that you don't do now? What were, I think that'd be interesting to talk about.
So when I got into crypto, it's actually really funny. So I have a friend of mine who, you know what multi-level marketing is? You know,
Oh
those
yeah.
pyramid schemes, how there was all
Yeah.
those back in the, I don't know how old you are. I'm 31.
Yeah.
So back when I was in my early 20s, a lot of my friends who had just got out of high school or were in university were trying to make a lot of, some side money. They all got involved in these little multi-level marketing schemes, whether they're selling knives for Cutco or whatever. And so I had this buddy who would always invite me to these dinners, right? And he'd be like, "Oh, dude, you got to come to this business dinner. And like, trust me, there's free food and beer. And like, when you're 22, free food and beer, it's like, okay, I'm
Oh
coming."
baby.
But, sure enough, you get your snacks and you're sitting your beer and you sit down and the guy pulls up the PowerPoint and like 3 slides in is a pyramid, right? All you got
Yeah.
to do is sign up your buddy and then he's got to sign up his buddy and then they got
Yeah.
to sign up their parents. And next thing you know, you're getting some fucking money and it's all a scam. But I'm like, whatever, I'm here for the free food and beer. Like, I'm not signing up.
Yeah.
So he would always invite me to these things. And then this is the guy who told me about Bitcoin. So naturally, when the guy who's been inviting me to multi-level marketing scam meetings tells me that he's found the future of money, I'm like, yeah, okay, dude.
Yeah.
So I didn't believe him initially. And this was when Bitcoin was, I think it was 2011, 2012. So Bitcoin was like dollars. Like it was cheap. And I didn't buy any. And then it went to 200. And he's like, dude, these Bitcoins are like, they went up huge. Like they're worth 200 per. And I was like, holy shit. Like maybe this is something. So I bought a bunch. And I rode that initial bull run from 2013, 2014, where I think we topped around $1,400 or $1,200, something like that. I think it was like 14, 1,500 Canadian, 1150 or something US. And so I saw my portfolio from doing nothing go up multiples because what I did is I joined Twitter. And anyone at the time, 2013, 2014, if you had 5 to 10K followers, you're like an account with 3 to 400,000 in today's CT, to give you an idea. So guys like Kobe, Jeebus, all these guys were around back then.
Yeah.
They had like 5 or 10K followers and they were considered the, actual advice BTC, rest in peace. But I would just buy whatever these guys said.
Yeah.
Filecoin, barbecue coin, like garbage, right? But they said it was going to go up, and it oftentimes would because everyone's a genius in a bull market, right? I was early. It was like buying. It's like I'd say like it's the equivalent of buying altcoins in like September of 2016 before the 20K run. Like you basically could throw a dart at a board, and you were going to do a 2x, right? So I spread out all my Bitcoin across everything, right? I had a big old bag of Litecoin. That's where my initial fucking love-hate relationship with Litecoin comes.
Oh yeah.
And I my portfolios went like this, but I had no idea what I was doing. All I knew is I was like, okay, I buy this and I wait and it goes up and I'm rich now. So I quit my job. I quit my job. I worked at the bank. I have an accounting finance background. I quit my job. I'm like, yo, mom, dad, like I'm a day trader now. I don't know if you know. But, like, I don't need to work anymore. Right. And I think I had turned maybe 20,000 or so at the time into over 200. And at 23, that's a lot of money for me, right? At the time, I was like, I don't ever need to work again, right? Like, what do I spend money on? I live at home, like, you know what I mean? So I quit my job right around all-time high, like a month before. And then stuff started going down. And back then, there was no stable coins, right? You couldn't just go to Tether and be out of volatility. I didn't know anything. I didn't know you could short. I didn't know leverage was not really as much of a thing. What wasn't even really a thing back then. There was no stable coins, but I didn't know anything. I didn't know I could cash out. I didn't know shit. And so I just watched this portfolio that I had 10x start crumpling. And I was in altcoins. So when Bitcoin went down 60, 70%, my altcoins went down 90, 95%. And I didn't know I could sell and cut my losses back to Bitcoin. I didn't know that Bitcoin was the one I really wanted to hold. I didn't know anything. And so I basically lost all of it, even my initial, because on the way down, I started gambling, right? Like I was literally just trying to buy stuff, hoping it would recover, putting in more money. And I ended up losing money in the bull market, which is crazy to think, but I didn't know what I was doing. I call it gambling because it, to me, was the equivalent of playing blackjack and not knowing the rules and just betting just because it's fun. It's like, oh, I like jacks. That's cool. Let's just go to it. Like I didn't actually know. It's like, okay, well, if the dealer is showing this, I'm supposed to stay. You know, I didn't even know the rules of the game.
Right.
So I was burnt. Like I was burnt. I went back to my job. I like begged my boss. I was like, yeah, please hire me back. Like I'm not a day trader.
Yeah.
Got my job back, and I was kind of destroyed mentally from like the idea of crypto. I was like, fuck that shit. I hope it all goes to zero. It's no different like now when you as soon as you exit a short, you want price to pump. As soon as you exit a long, you want price to die. Like it was the same mindset. I was like, I want crypto to go to zero. I hope it dies. But over the next kind of 6 to 12 months after having that experience, I was like, there's got to be, you know, I've always been a numbers and math guy. I'm like, there's got to be a way to predict some of this stuff. Like, it can't be completely random.
Right.
And so that's when I kind of started my journey into Forex. And Forex is a whole different beast of its own. But I mean, at the end of the day, it's a chart, right? And if you consider crypto a currency, right? Forex is no different. Why is trading the US dollar versus the Canadian dollar any different than trading Bitcoin versus the US dollar or any sort of cross pair, right? It's not. But Forex is a more mature space. It's been around a lot longer. So there's a lot of gurus, right? And I started taking courses, right? I started watching YouTube videos. I paid for a bunch of content. I found ICT, who ended up being one of my main influences in how I traded. And I started to get a firm understanding of price action between 2015 and 2016. And I started trading Forex. And I'd say early 2016, I started making some money doing it. Not enough money to do it full time, but I was consistently able to make more money than I lost on a month to month basis. So then during that 2016, 2017 period, I saw crypto crash from where it was when I was all in down to $200 again, and then slowly start tick, 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 tick. And I was like, okay, well, we're back near that previous all-time high. I wonder what happens if we get above it. So I started buying. I got back involved in crypto in 2016. And if you don't believe me, go look at my Twitter. Like I've been on Twitter since April of 2014. So you can go see me with terrible chart colors, drawing ascending triangles on altcoins in 2013. Or 2014. It's crazy. But I started just getting back involved in buying. And I did okay in 2017 because I actually had an idea of what I was doing. I knew that, okay, if I buy here and it goes below here, I don't want to be in this position anymore. And I could cut it. Like I actually understood what risk management was. And these are all things I learned in Forex. I didn't learn it in crypto. I think a lot of people who are in the space, you learn in the bull market, right? And then you learn some really tough lessons in the bear market. I was fortunate enough to kind of do that in 2013, 14. So by the time 2017 came around, combined with that Forex experience, I kind of had an idea how to read charts, and I understand risk management. I knew how to draw support and resistance because when price is going up, the most basic things work. SR flips, ascending triangles, bull flags, that stuff works. When price is trending really hard in Bitcoin, the most basic patterns for continuation seem to work really friggin' well. And so I knew them. So 2017 bull run, I did well. I didn't do well enough to make it, I would say, but I did really well. I did a multiple on my money. I didn't lose a ton of money. I sold most of my crypto when Bitcoin was above 15K. And I really started posting on Twitter around that time as well. And I think where I really made my mark on Twitter was in the bear market because I knew what a downtrend looked like. Right? Most people who join crypto, they only know up only. We gonna make it.
Right.
The super cycle, whatever you want to call it, it was the same thing in 2016, 17, just different terms. Every time we went from down to 6K floor, everyone thought the next bounce was going back past all-time high.
Yeah.
Every time.
Yeah.
Go up to 12K, then it went to 6K again. Get up to about 10, we're going back to all-time high, back to 6K. And then eventually that bouncy ball broke the floor and we had that final flush, right? But I was consistently kind of shorting the top. And basically I was like, guys, we're in a downtrend. This is not going back to all-time high. This is going lower. Yeah. And that's when my Twitter started to gain a little bit of traction as well. The rest is history, man. By the time we hit 3K in 2018, I knew exactly what the fuck I was doing. I was like, okay, we're down 85% from all-time high.
Yeah.
It's time to shove. Ethereum is down 90% from all-time high. It's time to shove.
Yep.
And then when the COVID bottom happened, I did get scared. I mean, I was watching on BitMEX. I saw zero show up on the order book as
Wow.
we're $3,000 above zero, and you can see all the orders stacked above zero. And then our Lord Savior Arthur saved the market.
Mhm.
And I didn't even buy that second 3K dip. I waited. I was worried. Like COVID, the world's closing down, stock market gaps down like 50%. I was like, holy shit. But then when we got above 6K pretty quick, I just bought back in, and I would consider myself having made it in this last bull run. Absolutely. Like I don't need to work anymore, which is a nice feeling.
So, I mean, that's a great, if you see, probably can see from the comments, people love the story, and thanks for being candid there.
Of course.
I wrote so many questions I have from that. First question, when you quit your job and the one you came back to, did you leave amicably or on the way out where you're like, peace, dude?
It wasn't quite like that scene where I was like, F you, F you, F you, you're cool.
Yeah.
Like, no, it was pretty amicable. I mean, my boss like was right at the end of the day. Like I have an accounting finance background. I have a CPA. And my boss was like, well, why can't you? And this is something I tell people now. I give advice to them now because I did it. They're like, can't you do both? And I was like, nah, I don't need it.
Right.
But luckily, I was able to get a job with the same company at a different branch in a different city.
Oh, good.
But I tell people this all the time. Do not quit your fucking job.
Yep.
Don't do it. Don't do it. Like trading is, first of all, extremely difficult. Like to trade full time, people, Forex is the worst for it because you see the person with their phone, they're in a pool and their phone just has MetaTrader open. It has all these big profit numbers and they're drinking a drink. That is not a full-time trader. No. Go ask anyone who trades here full-time. They sit in a room with multiple monitors. The blinds are closed. There's neon lights on them. They're drinking Red Bull at night. They're barely sleeping. Like that's the life of a full-time trader. If that's what you want, go for it. But you're not sitting on a beach with a laptop charting. That's not real. You're more likely to live that kind of chilling lifestyle just investing in crypto. Because if you're just catching a long-term trend where you don't need to check price every day, then you could be traveling the world, open up your trading view a couple days at a hostel, make sure things are still copacetic, and then continue with your travels. But if you're like a day trader, you're like the hours, you're not working a 9 to 5, you're working like a 9 to 9. You're working more than 12 hours a day. You're always on. And if you're not on screen, you're staring at this, and your girlfriend, your boyfriend, whatever you have is like pissed at you at dinner because every 2 seconds you're looking at your phone. But they don't understand. It's like, well, I might have just made $5,000 or lost $5,000 or whatever, and I need to be locked in. It's not glamorous, right? You see the watches, the blah, blah, blah. Most of those people you see flexing that shit, they're not day traders for the most part, or they're day traders who have already made it and now are kind of living off the profits of that. But especially when you're learning, it's a fucking grind. And I tell people to not quit their jobs because you don't need to, for a couple of reasons. First reason, you can look at charts on the high time frame. People always ask me, they're like, oh, well, how do I catch this move? I'm like, dude, okay, let's say you work 8 hours a day. Look at the 4-hour chart. Check it before work, at lunch, after work. That's 3 4-hour candles, right? So do your analysis on the weekly, the daily, execute on the 4-hour. That's pretty reasonable. If you have a full-time job, you're not scalping the 5-minute chart.
Nope.
You know what I mean? That's just the way it is. Do it on the high time frame. And then on the weekend, you can do your low time frame shit. But the beauty of trading is there's opportunities on each time frame. There's going to be less signals on the high time frame, but you're going to catch the bigger moves as well, right? So you don't need to be on the low time frame, especially if you have a job. If you're like worried about not catching moves, make your decisions on the daily or the 12-hour or the 4-hour. That gives you lots of time to decide what you want to do. And you don't need to be staring at the screen all day. You can work your job and then come home and see where things are at. Also, you don't want that stress of needing money to live and having to pull that money out of your trading account. Because if you have to pay rent at the end of the month and you're not having a great month trading, you're going to start chasing trades consciously or subconsciously that aren't there because you're like, oh shit, I need to make $3,000 to pay some bills, right? You don't want that. Especially early on, you don't want to withdraw anything from your trading account. You want to compound it. right? So if you
Yeah.
start with 10K, you want to compound it to 100. And the worst way to screw up compounding your account, other than over leveraging and taking a huge loss, is pulling money out. You don't want to be trading to live until you have a pretty big stack and you have a nest egg of money to cover your expenses, so you're good. So I usually tell people the check, because everyone wants to trade full time. I get it. Trust
Yeah.
me. You want to be able to print money on the internet, not have a
Yeah.
boss. Sure, except for the market is the worst boss of all.
Mm.
The checklist for me, you got to have a minimum of 6 months. I would say better off having a year of expenses saved up. So if you make $0, you can still pay for food, still pay for your rent, still pay all your bills. Minimum 6 months. I'd say a year is better. 2 years is even better. You want to have at least 12 months of trading experience where you've made money, not just trading experience, where you consistently are making money.
Yeah.
If you just signed up to Binance 6 months ago and over the last 6 months you're break even, do not go full time. I'm saying you need like 6 to 12 months of like, I'm profitable. I'm making more money than I lose. And then you want to have an account that's big enough where the 1 or 2 to 3% that you risk per trade is a meaningful amount of money. If you're trying to trade full time on a 10K account, 1% risk, right, is $100.
Right.
So what? You make a 5-hour trade, you make $500. Okay,
Yeah.
well, let's say you make 20 hours in a month. That's only $2,000. That's not enough to live in most major cities, right? So you need your account to be big enough that the money you make can actually sustain your lifestyle. So what I would suggest is keep your fucking job, use the money from that job to save up, fund your trading, and keep doing that until you've done those things, built up that nest egg, and then built up and compounded that 10K account into a 100K account. Now, when you make 5R, which is like a 5R week is really good.
Yeah.
I think some of the things people have a misconception of about profitability is because it's so easy, especially in a bull run, to make money trading. It seems like it's just falling out of the air. Like a Forex trader, if they're able to grind out 5-6R in a week, that's a really good fucking week, right? Because think about it, on a 100K account, that's $5,000 in a week.
Yeah.
You do that 2 or 3 times in a month. Now you're making 5 figures a month. That's a good living. But you need to have that account size to make it make sense. And so to get there, start small, compound your account bigger, make sure you don't have that extra. Like that's what happened to me is like when I was trading full time early on, I was like, okay, I need money to pay rent or to do this stuff. So I was chasing trades and I was just, you need to, when I trade, every time the money goes into a trade, it's gone. It's either coming back worth 2, 3, 4x what I put in, or it's gone. It's not like this is my rent money, and if it comes back less than what I put in, I'm in trouble, right? Because you've already set yourself up for failure with that mindset, right? You got to be detached from the money, and it's very hard to do that if you're not financially stable as is. That's where the term comes from. Don't risk more than you're willing to lose, right? Most people do. So keep your job. R stands for risk or reward. It depends. Right. So 5R, right? The way I always say 5R, really that would be reward to risk 5 to 1, right? So if I'm risking $100, my reward is $500.
That's fantastic. All of that. There were so many good things you said. What I wanted to ask you is this. So I've talked about, though, you also want to cap your account at a certain size. So like, you get up to 100. Are you taking out, you get up to 120K? Are you pulling out that 20 to get back to 100? Because I suggest to people, if it gets too big, you might start to ape up the risk threshold. So are you capping that as well?
Absolutely. So the way that I've done it, because I've made the mistake early in this bull cycle, luckily it was a mistake I caught early on, is I ran up a leverage account huge. And I do think it's important to understand that like you need to think of in terms of R. That's how I always tell people, because if your account's 10K, R is, let's say you're risking 2% a trade, R is $200.
Okay.
When your account's 100, R is 2,000. When your account's $1 million, R is all of a sudden 20 grand. But if you start thinking, if you have $1 million leverage account, if you say, well, fuck, if I'm wrong, I lose 20 grand, you're going to fuck yourself up, because 20 grand's a lot of money. I don't care how much you have. 20 grand's enough to for multiple months of rent to buy a fucking car. Like that's a lot of money.
Yeah.
But if you start thinking about the amount of money that it is, it's going to make it hard for you to scale up.
Yeah.
Right. It's just R. You got
Yeah.
there just thinking it's R. It's one R. Right. And you're allowed to, if you're aiming for asymmetric risk reward, you're okay. But I do agree. Once you get to a certain point, for me personally, it's right around that $1 to $2 million mark on an account. I just don't see the need to risk more than $20,000 or $30,000 on one trade. It's just nuts. Coming from where I've come from, I've secured myself in a way where I don't need to. So I do exactly that. Once I got my account, because when early on I had an account, I ran it up huge. And then I took a couple losses where I was losing like $60,000, $70,000, $80,000 on stop outs. And I was just like, what the fuck am I doing?
Wow.
You know what I mean? Like I just lost someone's salary on a scalp that I wasn't even very sure I wanted to take. So I sized down my leverage trading a lot. And now I have an account that I trade, and every month, any excess I have over my baseline number, I withdraw. And I either, depending on where we are on the market, I would either buy Bitcoin or Ethereum, or I would just put it into stables, put it onto my hard wallet, and it's off. And then that number is just growing. I do have other money that I invest into Bitcoin, invest into Ethereum for long term. But in terms of leverage trading, absolutely. I have a number that I'm at now where I'm like, okay, once we get over this much, I'm out and I'm back to my baseline. And I also don't fund it back up. Like if I end the month down 10 grand, I don't throw another 10 grand in because that gets messy, right? All of a sudden you take a huge loss streak. Once it's off that account, it stays off there.
That's good. I like that discipline. I like that you're both wanting to have enough money to make good gains, but you're capping it as well. And feedback's great in the chat room. I have a couple more questions about before we get to your TA, hopefully, like Forex. I've traded a little bit, but I'm terrible with it, so I haven't really gone that far. Do you find it more difficult to trade than crypto? I've heard some people say like it doesn't trend as much, like in Forex. There's not as much trending to it. I don't know if that makes sense.
I mean, so the reason I love Forex is there's infinitely more pairs and infinitely more useful cross market. So I'm a PA, like a purist, right? I don't do anything with order flow. I don't do it. Like I see some of the guys on Twitter who I think are great, who are using order flow and volume profiles. And they're like, they're watching the order book.
Yeah.
And that's just like too big brain for me. Like I'm sure I could learn it, but I'm also a believer in like, if it ain't broke, don't fix it. People always ask me, they're like, why don't you use this? I was like, because what I do already works for me. Why make it more complicated?
Yeah.
And what I love about Forex is you can take any two currencies, right? And then you also have the dollar index. And now you can do all sorts of cross-market analysis. So if I want to trade the dollar CAD, so USD divided by CAD, well, if I go and look at the dollar index and it's in an uptrend, okay, I now know that the numerator of dollar CAD is in an uptrend.
Yeah.
Right. So that means that the dollar is outperforming the Canadian dollar.
The base
so I'm now
versus the quote
biased
pair, right?
on that pair. And you could do the same. And then I could also look at CAD JPY. And so if I say if the DXY is in an uptrend and CAD JPY is in a downtrend, to me, that tells me that the common denominator between those two pairs is the Canadian dollar and it's weak.
Yeah.
And I know that the US dollar is strong. So now I already have my long bias built in. And you can do that and I tell people with this with crypto too. I was like, listen, if you want to know if your altcoin's good, don't just compare it versus Bitcoin, compare it versus Ethereum. Right? Because if your altcoin is uptrending versus Bitcoin, but downtrending versus Ethereum, you're better off in Ethereum.
Right. That's it.
And people don't understand that cross-market analysis. I was like, all these are two assets. BTC USD is not Bitcoin. It's Bitcoin versus the dollar. Right. That's why if the dollar is rallying, we often see Bitcoin decline and vice versa. So I like Forex because there's all these different pairs. There's always opportunity. It's very, very strict in terms of seasonality, timing wise. Like crypto for 3 months, it's going to move at the New York Open. 6 a.m. PST, if you're not on screen, that's when the move happens. And then as soon as you start waking up at 6 a.m., right? Guess what happens? Then the market starts moving at 3 in the morning.
Mm.
And then it's going to do that for a few months. And then it moves in the middle of the fucking day. And it does. There's no rhyme or reason. It's open on the weekend. Forex is closed on the weekend. The times of volatility are the New York Open and the London Open primarily. So you can choose where you live, when you want to pay attention. And I know I have a strategy that is solely based on the London Open. I watch price action going into London. I look for a fake out of the range effectively.
Yeah.
And then I try and catch the trend of the day. And I could be on screen for 2 hours and I'm done.
I love
Whereas
it.
crypto, you can't really turn off.
No.
Forex, if you want to take a vacation, go ahead. Your account balance doesn't change. Whereas if you take a vacation and Bitcoin drops 50% while you're away and you're holding Bitcoin, you're down, right? In terms of dollars, a lot. You can't really unplug the same way.
Interesting.
So I definitely like Forex for that kind of stuff. It's just a more mature market.
Yeah.
I do think it trends. Like I think that people they see these like 1 or 2% moves in Forex, but in Forex, most exchanges you have 100 to 500 times leverage.
Okay.
And so a 2% move is actually huge in Forex, right? Whereas people just they have these crypto blinders on, being like, if it doesn't go up 10% in a day, it's fucking useless, right? Same thing with gold. People are like, gold barely goes up. I was like, yeah, but if you trade gold with leverage on any sort of exchange, gold going up 4% is a monstrous move. Right. So I just think there's a lot you can do with Forex. I also think it's a great learning environment for people in crypto because there's so many charts with so much price history. It's a great way to backtest. It's really hard to backtest Bitcoin because you know all the levels because you stare at the chart so much. When you're like, I wonder what happens when it breaks 40K. You already know a big green candle goes to 50K. So it's really hard to not in your mind be like, okay, well, I'm looking for longs. If you really want to backtest, go pull up the cable, the Euro USD, scroll back to 2009 and just start marking out levels and seeing if it's working and what you're doing makes sense because you don't actually know the price action. So, but the PA works the exact same. I personally like Forex. I trade it every single night. I check the London Open and I see if there's just an easy setup. I might take 2 or 3 trades a week, but that's all I really need.
I think that's smart too. You know, some of the best traders maybe only take a trade a month too, right? Because they know what an opportunity is versus just like a boredom trade. So it sounds like you're kind of comfortably sitting in the pocket. You're in a nice little pocket of control with how you're approaching the market.
Yeah, I told people before we had this, when we were trading at 42K and about 3150 on BTC and ETH respectively, we had that move to 45 and then we kind of had a lower high forming. And I did a video and I said, listen, like a lot of people are telling you long right now because they think this is the next leg before higher. And I said, we have a very easy bias level at 45K. I was like, above there, we go 10 to 15% higher. Boom. And below 41, we go 10 to 15% lower. So why force a trade in between if I know that if one of these two conditions are met, I'm going to catch a meaty move. And all it takes is that if you're able to short 41.5 down to 35, that could be your month maker.
Absolutely.
Like, that's it. You don't need to take another trade. If you size that properly on a decent size account, that's more than enough money that you're ever going to need on a monthly basis. And that's why I tell people it's not about catching the bottom and the top. Nope. Everyone wants to say I bottom ticked it, I top ticked it. I'm interested in catching the meat of the move, and I'm interested in getting in when I have some level of confirmation. So if the move is 20%, but I'm only catching 12 of it, but I knew that when I got in, my probability of being right was way higher, I'm totally fine with it.
There you go, folks. I probably can see now why I've been recommending Mayne on Twitter. Guys really knows what he's talking about. I'd love for you to get your screen ready. I'd love for you, when you're available, maybe give us a sense of your style of TA, how you're approaching it. But if you don't mind, give us like the last 2 or 3 months, how we got here in Bitcoin, and then kind of what you think we should look at going forward.
Absolutely. All right, let's see here.
People love your streams. People love the story.
How do I share my screen?
It should be in the middle. You see the gear sign settings.
Oh, got it. Okay. Show advanced option. No, it just says virtual background camera audio.
All right. On the StreamYard link.
Oh, share. There we go. Okay. Yeah. Share screen. All right. Let me
There
know
we
if that
go.
works.
Boom.
Beautiful. All right. Everyone can see.
Yes, sir.
Now, if I use this little pen tool here, does this show up?
Oh, yeah.
Okay, cool. Everyone should get this. It's called Epic Pen, especially if you're a streamer.
What is it?
Okay.
Epic?
Epic Pen. Yeah. So it's this little thing here. It's
Yeah.
free. So you get a pencil, you get a box,
I
you
think I've
get
seen Burb use that.
a
Okay.
line. And what's nice is you just hit click delete. Because what I often do is I'll draw all this stuff with the Trading View pen.
Yeah.
And then I'll hit delete, and it also deletes all my SR and stuff. And it bothered me immensely. So this was a great solution.
All right.
So let's start high time frame. I do think that this is one of the weirdest cycles we've seen, right? I think a lot of people are a lot more accustomed to this is what everyone was waiting for the top. This, right? Everyone wanted to see the blow off top,
Yeah,
and then the bear market, right? So when we finally had that blow off top type of move, I don't know many people who thought we were going to come up and effectively retest all time high again and go a bit beyond.
Right.
But at the end of the day, for us to go into some sort of crazy super cycle or whatever, to me, it's like, I don't really care. Like, we had 2 moves, right? That's 1,500%. And then we had another move that did 150% from low to high. Like, there was a ton of options to make money in these 2 big legs up. I think what a lot of people have trouble doing is looking at the bearish scenario in crypto. Because everyone wants things to just go up. But I'll kind of mark charts up from the monthly here, and we'll zoom down right into like the nitty gritty. We can get on the intraday. But starting at the monthly, what jumps out at me immediately, right, is the run above this high and the failure. Okay.
Yeah.
This being the last down candle that led to this move up, I would call this an order block. Some people would call this demand. Right. And then in terms of SR below here, right? Because effectively, one thing that is nice is the monthly technically hasn't lost market structure.
Yeah.
Technically, still in a monthly uptrend. The problem with that is people are like, well, we're still in an uptrend on the monthly. It's like, that's true, but this leg can be negative 50% on the monthly. Right.
So you know what that looks like? That looks like when people say, I told you so legend, like it's going to go up and then it drops.
And then like they say buy here, and then they say, I told you so here, forgetting that this was a 50% drawdown. Right. So the thing is with monthly levels, monthly ranges, everything's bigger, right? And it's the weekly ranges and levels are going to be bigger than the daily. And so a perfect example of that is here. People will be like, well, monthly support held. I'm like, it absolutely did. But if you bid this monthly level at 37, are you prepared to hold for a 12% drawdown before the monthly closes in hopes that it closes above there? If you are, great, right? But some people are going to buy the monthly level. It's going to drop 10%. They're going to freak out and puke only to find out that the monthly closed back above their level, right? But looking at the monthly, these are the 3 most relevant levels, I think. I'll give you a 4 here. Now, no one wants to see these. I want nothing to do with these levels, but they are relevant because if we do get below 37 and hold below there, I'm pretty sure we go to like 25. There's a little level here on the low time frame, but I'm pretty sure we come into this. Seems like the most obvious retest area, right? Back into here. We don't want that to happen. Let's all pray that it doesn't happen. But you have to be prepared to anything. There's a little level right in here. See 23. If I go down to like the daily or something, I think it shows up. This little consolidation right here.
Yeah. Yeah.
But I'm not really interested in buying that, to be honest with you. Like, I would much rather buy lower. I'd rather buy a reclaim of the lows. But we'll go back up to the high time frame. So we made our all-time high. We came down, came up again. We swept the previous high. Closed below. This is literally a monthly swing failure pattern. You could trade this on the monthly. How do you enter an SFP? When it runs above, you enter on the candle close, your stop goes above the wick, and just into monthly support, you almost have a 2-hour trade there. Pretty damn close. I wouldn't have traded it like that, but at this point, you have to be cognizant. This is in November, right? If you zoom in one more level, this still gave you some time to get out above 55K when
Definitely.
that monthly had already closed as an SFP.
Yeah.
So you can see here those levels that we marked out, how relevant they are. So we marked out the previous all-time high. We had that little consolidation below there, and then we ripped, right? Broke above this level, ripped.
What's that, 14?
Yeah, 14, exactly. So this is the all-time high close. This is the all-time high wick. And you can see how that capped this rally and then started this one. That monthly level, you can see it's just this consolidation here, right? Before the move up. And we came in and we tested it and we're potentially putting in a higher low. So there is some promising signs here at monthly support that we could be seeing a reversal. I don't know. It's too early to tell in my opinion. But what I want to look at first is how do we get down here? And what were people doing up here who were buying? To me, this sell setup is the exact same as this one. So if you look here at the weekly, I'm just going to delete all these levels for a second. If you look here at the weekly, we had this wick, traded above, back below, broke market structure. You need to be sell conscious into here.
Yeah.
Right? This is Trader SZ calls it a deviation, right? But whenever you are coming up, whenever you're in an uptrend, if you have an SR level, if we're in an uptrend and we trade above the level and then back below,
boom.
Why not look for a short? Because your risk is defined.
Yes.
This is where you're wrong. So here, I'm wrong above here. So why not look for shorts? And if we go higher, great. You're wrong.
Yep.
Get in a long, because if we do this now, great. Now you're long biased again and you took a 1 hour loss. It's not the end of the world.
Yeah.
This is the exact same setup.
Yeah.
Right? Your risk is now defined above this wick. And are you telling me like you're not interested in selling above 60K here or above, 55K here? You need to be, especially when even as high as the weekly, here's your low that generated the high. That's a break in market structure. Here's your low that generated the high. That's a break in market structure. And the market structure shifted on the low time frame even quicker. The daily was so clean, in my opinion, for the sell.
Absolutely. Absolutely. Up thrust.
This is your deviation.
Yeah.
So when we come down here, break market structure. This is a pullback you need to be looking to sell into. What does this look like? A bear flag, whatever you want to call it.
Yeah.
If you're a trader, Mayne trader, an ICT trader, what is this? Well, you got your fib into your sweet spot, into your bearish order block, whatever you want to call it, into demand or supply, excuse me. Right? Here's supply, came just shy, but close enough. Another SFP right there. Yeah. But this is the one thing I think people have the most difficult time doing is they might know how to get in a trade. They might know where the key levels are, but you need to know your bias first. Whenever I'm looking for a trade, first step is what is my bias? Okay? Because that's going to determine when I get to that key level, what type of setup am I looking for? Right? Because if I come up and I say, if this is a key level, but I don't know if I'm bullish or bearish, well, then what use is that, right? Because if I say, well, this is my key level and I'm bullish, well, what happens if price fails at the level? Do you have a bearish scenario? So I knew when we came above here and failed, my bias is now to the downside. So now in all the price action after this candle closed through is bear, I'm now got my blinders on. I'm looking for short setups. I'm looking for reasons to go short. You can have a level. That's half the battle. Doing TA is great. Knowing where a level of importance is great. It's no different than when we're coming down to support. If you're like, I want to be long here because this is weekly support. Well, if it does something like this, I know that, okay, it looks like it made a new low here, but it then reclaimed the level and I'm bull biased. I want to look for reasons to get long. Okay, there's a break in market structure. I'm going to buy the retest. So you have to know your bias. Is price going up and down? You might not be right, but you need to pick a direction because that's going to inform all the decisions you make. So number one is your bias, right? Number two is where are your levels of interest? Where am I actually looking for the setups to form? Mm-hmm. That's where your TA comes in. SR, supply and demand, swing failure patterns, over-unders, head and shoulders, whatever you do, moving average crossovers, all of these things need to happen near key levels. and they need to be in line with your bias. Maybe you use moving averages to determine your bias. Maybe you use moving averages to determine inflection points, being like, okay, well, I'm bull biased, and we tag the 200 MA here, right?
Yeah.
Bias is first, right? Because if you're bear bias and we tag the 200 and MA and rally, your bias was wrong, which is okay. You're not going to be right every time, but you need to know, what direction do I think price is going to go? Where am I interested in looking for a trade? That's where your TA comes in. And then 3 is your entry technique, risk reward stuff. So everyone's so concerned on, okay, well, I want to get in on the SFP. I want to get in on the over under. None of that shit matters until you know, okay, am I bull biased or bear biased? Once I know that, where are my levels of interest? And then before you worry about this, don't do shit until it gets to one of your levels.
Yeah.
Right. So if I'm bear bias here and I'm saying, okay, I'm going to sell a retest of this zone, I don't care about this.
Soon too early.
My area, now I'm paying attention.
Yeah.
Right now I'm paying attention. And this like top worked really friggin' well. Like if you mark out the demand here, or the supply, excuse me, and then you zoom into, I don't know, like the H4, like it was super clean. This was your high, sold off below. You cannot tell me that this is not a downtrend on the H4. High, low, lower high, lower low, lower high,
and
lower
boom.
low, right? Lower low. And then it comes all the way back up and it retests that supply from the daily. But what does it do? It makes a fractal of this on the lower time frame. You have the exact same setup here. Well, you have a high, it deviated above, sold back below, right? So now I know what I've done here is I've built my bias. I've built my bias. I'm bearish here. So if price comes back here, I'm looking for reasons to get short. It comes back here. Okay, boom. It's way easier to find a trade setup when you know what you're looking for. Bear setups, short setups, because you're bear bias, and then where to look. That's the biggest problem most people have. They might say, okay, well, I am long biased. I'm long biased, but where am I looking for a long? It's like, okay, well, maybe I'm looking for a long here.
Yeah.
Well, then you don't chase that little pump up here.
Nope.
You wait. And maybe it doesn't come back here. Too bad. Look for the next one.
Boom.
Right? And then it comes here and you get that set up and now you're involved. You missed this trade. You caught this one. But you were long biased. You knew we were in an uptrend. And then you found your levels where you want to do business. And that's up to you. You can do it on the hourly. You can do it on the 4 hour, the daily, whatever fits your system, your personality type. Go ahead. But wait. That's the problem most people have is they get their bias, they get their levels. And then when price is not trading at their level, this is where FOMO happens. It just keeps going up. Oh, fuck. It's not coming back for me. I better just long, right? And then what happens as soon as you long here? It does this. And then what do? You close it and you short it and then it bounces.
Yeah.
You look at it the next day and you go, holy fuck, if I would have just waited, it hit my level perfectly and rallied.
How many times you've done that? I know I've done that a million times, bro.
Infinity.
Yeah.
There's no worse feeling than being in a trade like this. Like I tell people will be like, hey, so I entered this short and price is here and I want to close it. And I go, well, but isn't your idea wrong up here? And they go, yeah, but I think it's going higher. Right. And then they close it. And then what happens? And you're like, well, what the fuck? Your stop goes where your idea is wrong. So what I always tell people is like, once you're in that trade, if it has not hit your stop, your idea is not wrong yet. It might come mighty close, but as long as it doesn't hit it, your idea is wrong. Maybe your stop's in the wrong place, but if you're wanting to exit your trade here, why was your stop here in the first place? Right? Your stop goes where the idea is wrong, and your target goes where your idea is right. Now, taking profit, I think, is a little different. If you see price action changing and maybe it does a big wick near your take profit, sure, take profit early. But one of the most annoying things that will happen is you'll get filled on your short, you'll close it here, and then it will dump, right? Or the flip side, you get filled on your short, it hits your TP, you say, oh, it's going lower, and then it does one of these. And you're like, oh, fuck, I've just round tripped all my money. So I think a lot of people, the emotions come from not having that plan. What's your bias? Where you want to do business? And then you wait. And a perfect example of that is where we are kind of right now.
There we go.
Right? So if we're at 40K, let's say 40K here is your bias level.
Okay.
And a bunch of people on Twitter long this. And they're all posting how they long the bottom, and you missed the generational Putin war bottom. And
Generational.
and you're just in your head like, oh my God, we're going straight to all-time high, and I'm
Yeah.
fucked.
Right.
And you're going to end up longing here. And then guess what's going to happen? It's going to do this. You're going to close your long, and then it's going to go up. Right?
Right.
So let's say I'm bull biased above here.
Okay.
Well, guess what? Until we get above there, I'm not doing shit.
That's right.
And then when we do get above there, guess what? I'm now bull biased. I'm waiting for a pullback. Let's say I think we get a retest at this level. Let's say it does this. I'm not going to chase it.
Nope.
Right? Because eventually it's going to pull back.
Yes.
And now it's at my level of interest. I have a bull bias. Now I'm zooming in and I'm looking for that low time frame setup on the hourly, on the 4 hour, whatever time frame you want to enter. Sure. But it's going to give you a setup at your level. The problem is you're probably going to enter early.
Yep.
And then you're going to over leverage and you're going to do all these fucking things that end up screwing you out of a position. I find that people tell you to remove emotion while trading. The reason you're emotional is because you don't have a plan. If you have a plan to get involved, who fucking cares what happens in between? Right? But the problem is people want to be in every move. You want to catch the low. You want to sell the high.
Yep.
But Trader SZ, for example, who's been shorting this like a Chad all the way down.
Yeah.
And then he gets one long wrong or one short wrong. And everyone's like, oh, he's in it. He has a plan. If it goes above here, he's going to start longing. Who cares
100%.
if you missed this?
Yeah.
Who cares if you missed one trade? It's not the end of the world. So have a plan. And that's going to help you remove that emotion. So what would my plan be right now? Looking at the weekly here, that's resistance. This was support, kind of formed this range. We do have this potential nice little higher low forming here, which looks good. I think the plan is pretty straightforward. We've got this level right here, kind of 40 to 41K, 40 to 4,500. It's about as easy as it gets. If this is a higher low, right? If this is a higher low, we got to flip this. So that's my plan right now. I think as long as we're below here, I think there's a chance that we sell back off down into like 40, 35, 34 again, down into here, which could still then go up. We could put in like a little head and shoulders here, right?
Sure.
Doesn't have to just pump here. This has been a crazy, crazy move. They announced that they're invading and then they invade and we basically dump 20% or 15% and then rally 15%, right? So not catching this move is totally understandable. You didn't buy the war dip. It's such like, who fucking cares?
Yeah, right.
Like, who cares? No one knew for sure that this was going to happen.
Do you think some of it was baked in? Because I feel like it made sense that some was baked. Remember with the ETF launch, a lot of it was baked in, but then when there was official launch, we had a little pump, and it was the same thing here in reverse.
I think people there's always that common trading discussion around, okay, does news drive price or does TA drive price, right? And a lot of people say, well, you can't predict the news. And then there's the other people who say, show me the chart and I'll tell you the news, right?
Yeah.
So people being like, okay, well, I knew this dump was coming because of the war. It's like, well, dude, but we've been in a downtrend for 2 months.
Right.
So the fact that we ended up dumping in a downtrend, right? Blah, blah, blah. Like same thing with the COVID thing, right? When we had the COVID dump, where are we here? Way back here. This is the COVID drop here.
Ooh,
but could you not argue that we're in a downtrend already? Like, and so to me, I'm kind of in the middle. I think TA determines the direction. We were already going down.
But can I stop you there?
But I think news injects volatility and might increase the pace at which something happens. Right. When Elon bought, everyone's like, Elon started the bull run, right? When did he buy? Was it here or was it here? It was one of these like lows before a big move. But it's like we were already in an uptrend for like a year.
Right.
So Elon buying did not start the bull run. We were already in an uptrend, but it injected volatility and it made the move more rapid, right? That's what I think news does. I do think news is generally priced in a lot. but the market was already going down here. When Elon bought, the market was already in an uptrend, right? So it's not like Elon is the reason that we went up. We were already going up. Maybe he made it go up faster because of the news and more volatility in the market, sure. But I do think, yeah, I agree with you. I think some of this was already baked in.
Yeah.
I think here's what looks bullish right now. So first of all, that's my plan. Keep it super simple. I think if we can get above here, there's a pretty good chance that we go higher. I mean, I would watch. Obviously, this is potentially resistance here, right? Like we could just make a lower high here. So be cautious here. But I'm pretty sure if we get above here, we see a big move. And I'm targeting like 50K. So what's exciting about that is I don't care if I miss this, right? If I'm pretty sure we're going way higher, I'm okay getting on late. I don't care, right? At the end of the day, if I can get a 5R trade from here to here, and the person who longed down here, where was your stop? Here, maybe even lower.
Right.
What if your trade's only 5R? We made the same amount of money, right? So this is my key level. I think just watch this level. Let's see how the stocks open. Stocks actually ended up closing surprisingly decent. Like for all things considered, we literally made a new yearly low on stocks. This is a new yearly low. And then we managed to close the weekly green. I don't think a lot of people were expecting last week's candle on the S&P to close like this, right? So that's potentially bullish. We'll wait and see. But I don't necessarily think this is over, right? We could see a melt up on stocks here and then go lower again. Anything can happen. So I don't try and make super macro predictions. I just say, okay, what's the next level of interest? And so for me, for Bitcoin, we're right at it. And I think these are, like you were saying when you were sharing your screen right before we started, right? Wait for that spring and then get in.
Yeah.
That's going to be your opportunity. And I think this is the perfect example. You're going to see two things. You're going to see either a spring and then a reclaim, right? Or you're going to see an up thrust through the level. And then a pullback is going to be your long. Those are going to be the kind of two, like if we get a pullback here and it starts to find support, I'm looking along. Right?
Is there a level you're going to be uncomfortable that we drop down to 24K, 22K, or is it like just more volatility? Well, I mean, how would you approach it? Or you just
listen, we've never gone below a previous all-time high in a bear market.
Okay.
Right. So when we went to 1400, the previous all-time high was like 200. We never went below it. When we went to 20K, the previous all-time high was like 1500. We never came back below it. So the previous all-time high being 20K, each bear market, we've dropped roughly 80 to 85% from all-time high. So 85%, like we're talking 10K again, right? So is this out of the question? No. Is it scary getting back below the previous all-time high? Absolutely. But I do think you have to keep in mind that each all-time high is less and less of a drastic move to the upside, right? Like the 200 to 1400 move is a way bigger move percentage-wise than 20K is to 60K.
Yeah.
Right? Because there's diminishing returns. Right? Look at the log chart. It's diminishing returns.
Right.
These moves are way bigger, right? These all-time high moves from early on were way bigger than what we're going to see. And that's just the way that the market's going to work, because it takes way more money to pump Bitcoin when it costs 60,000 per than it did when it cost 200 per. So I do think there's diminishing returns. So I don't think coming below previous all-time high spells the death for Bitcoin. I think it actually gives you some really nice levels. Like I would bid 20K and I would bid 14K, and I would absolutely bid a reclaim of either of those levels, to be honest with you.
So do you think the easy money's already been made, though, to kind of extend your point about the diminishing returns?
I still think there's easy money to be made, because when Bitcoin is in an uptrend on the daily chart, it's easy money.
Yep. So
to take log off here, right? At what point did this become an uptrend on the daily chart?
14K.
I would argue above maybe here or above here.
Yeah.
And it basically did not make a single daily lower low.
Right.
From, let's assume it was 10K. So it went up almost 500% for almost a year straight. That's easy money, right? And when it made its first daily lower low, it went straight down 50% for 3 months. And then it made a daily higher high right here. And then guess what? It went straight up again for another almost 100% gain for another 3 months. Then it made a daily lower low. The daily is my favorite time frame to kind of just determine my trend, right? Because right now we're in a daily downtrend.
Yeah.
Where was the last swing low formed on the daily chart? So we didn't break market structure here, right? We swung it, but we didn't break it. So to me, this is your lower low. Above here, we have a daily higher high. And I'm pretty sure if we put in a higher high on the daily, we extend much higher.
Yeah, 46. If we flip 46, I think we're in pretty good shape. I want to ask you one more question, and then we'll wrap things up. COVID, right? I always wondered, this is what I wanted to ask you a minute ago. I always wonder what would have happened to that chart without that COVID bounce, because you had it up a second ago. I think we made a higher high there right before the collapse. Like I wondered if the bottom right there, isn't that a high, is that a higher high than the peak?
I think that we wouldn't have come all the way back down here. Like I think we would have maybe made either a high. So I personally, very publicly, was bidding the shit out of. Let me see if I can find the exact level. Was bidding the shit out of this, right? Because I said, okay, we just made a higher high. I'm like, this is going to be the higher low.
Yes.
Right, and then COVID, boom. So that trade didn't go so well, did it? But I do think that we probably would have made a higher low somewhere between like here and here.
Right.
And then this trend was inevitable, right? Like this to me was the bear market. And this was the beginning of the bull market.
Yes, the higher low.
So I just think this lower low, like I said, I think it was already priced in and the news just drove it lower than we thought. Excess volatility to the point where we came all the way down and retested here. I don't know a lot of people that bought here because this was scary as fuck.
Nobody
but
did.
I do know that a lot of people that did buy here did not hold it all the way to 60K. They puked it as soon as they were above ground because we all thought we were going to zero, and anyone who tells you otherwise is a liar. But to me, again, this just gave you an easy level, right? So once we broke this low, okay, well, once we're back above there, are you not interested in longing? Or back above here? Or back above here?
Right. So many good
times. One of these SR flips, you got to say, okay, we're in an uptrend now. Let's get long. And then it started going parabolic. So I completely agree with you. I think without COVID, this probably made a higher low relative to this one. And then the leg up. And COVID just kind of really fucked a bunch of people. And then it did it anyways. Like to me, right, to use trader as these terminology here, really COVID was kind of just a deviation, right? And once we were back above, that was your deviation. Okay, well, now we're back in uptrend territory. Like this is just a blip. I mean, it was a huge opportunity, but in reality, buying here and then here, like if you bought 6K, you crushed it. Right? Like, 3K is better, but if you bought 6K, even if you bought this floor, you accumulated, and then you averaged down a little bit here, like you crushed it. That's what I think people don't realize. And so let's assume that Bitcoin is going to die here again. Let's just assume, hypothetically, this makes a lower low.
25,
buying 30K to 25K, if we are going to 100K plus in the next market cycle, it's irrelevant. You're going to look like a genius, and you're going to do multiples on your account. Right. So when you're talking like high time frame spot buying, I think anywhere between 20, like if we do make a lower low, I don't think you need to worry too much about buying a little early. Right. Like people who bought this floor bought a little early. Right. But if you average down a little more and then all of a sudden your average is 5K, who fucking cares when the result is this? Right. And I think the same thing will happen here. If we do go lower, I think a bunch of people are going to get caught waiting for the bottom. And then the people who just said, okay, well, we nuke this low, I'm going to nibble a little. They're going to end up with a pretty nice average price. And then when that trend flips, because Bitcoin does that, it doesn't just go. This will be my last rant. I know I talk a lot. This is why my streams always end up being like 3 hours long. Let's see here. Bitcoin always gives you the clue. It's not like it's not rocket science. It's obviously way easier in hindsight. But this is clearly a bear market, right? Okay, maybe you didn't buy here, but are you not buying once this floor breaks?
That's it.
That seems like a pretty obvious SR flip. How about this high? We're now definitely in an uptrend at this point. So let's assume you didn't buy here. You didn't buy here because you still weren't sure. You got to be buying here,
Yeah.
right?
Yeah.
We're at $600. We went to 20K. So who cares if you didn't buy 200 or if you didn't buy 300 or even 400? If you bought 600 when we're in a very clear uptrend on the high time frame, you made money like a mother, right? Exact same thing here. Once we became very clear that we were in an uptrend above this high, like I think if you're
Yeah.
bearish on Bitcoin, once we broke this high,
Yeah.
why are you bearish? Let's say you bought 10K just holding Bitcoin, you did a 6x in less than a year. Go show me any other market, any other investment vehicle that can give you those kind of returns on a very safe, risk defined buy. I don't know if that exists, right? Your stop is where? Maybe below here? Like that to me, if you showed people you bought your Bitcoin at 10K, even now it's trading at 4x that price. People are going to think you're a genius. Who cares if you miss this? It's about catching the meat of the move. That's true on all time frames. So that's all I got. I know I said a bunch of shit.
I think you're and first of all, thank you for everything. You've said so many wonderful things that I agree with. And I think you've illustrated here just a simple technique of horizontal levels and identifying resistance that's recaptured. And I think new traders should really pay attention to what you said. You know, if you buy in the middle, you may have a bias, but if your entry, right, if you buy in the middle of the channel, you don't know what you're doing. But if you buy right when you flip a level, all of a sudden things get a lot easier because you know when your idea fails. And I think you've
Yeah.
done a really great job of explaining that.
Yeah. Know where your risk is, right? People always go into trades saying, how much money am I going to make if I'm right? How much money am I going to make if Bitcoin goes to here? That's the problem. You don't want to be reward centric, be risk centric. How
Yeah.
much do I lose if I'm wrong? Now there's no pressure. You already know the worst case scenario. How much easier is it to get into a trade when you say, okay, worst case scenario, I lose $1,000. Now you're chilling, right? You're chilling. And then if it goes to your take profit, it's a win. It's icing on the cake. But if
Yeah.
you go into a trade saying, well, how much am I going to make?
Right.
Right. And then it goes against you. That's when you start having these psychological problems where you start freaking out. Oh, do I need to exit? I'm feeling FOMO. I'm feeling scared. I'm over leveraged. Know where your idea is wrong and know exactly how much you're going to lose. If you're wrong, it takes a whole lot of stress out of any decision you have to make.
That's like the most important point, knowing when you're wrong and defining your risk. 100%, man. So you're on Twitter, you're on YouTube, you said have a Discord as well. Just
Yeah,
fire.
if you want to join the Discord, just shoot me a DM. It is free. YouTube, I do a stream every Sunday, and then I upload 1 or 2 pre-recorded videos during the week. So if you're interested in hanging out every Sunday around the weekly close, I'll do those. And yeah, man, we're just on the mission, much like you, to kind of spread some good information on crypto YouTube. I mean, crypto Twitter is its own beast, right? You know, I think there's a lot of great traders on crypto Twitter who share amazing stuff. I think crypto YouTube is a little bit more of a, I don't know, it's with the Bit Boys and the Moon Carls and the cryptos. Like everyone's telling you, it's like more of like crypto, get rich quick, buy this altcoin,
Yeah.
make money. I don't
Yeah.
think there's a ton of accounts that share like actual, here's what the realities of trading are. Here's how you can improve. Here's tools, things like that. One of your, channels like yours are great. Channels like Creds are great, where it's like, okay, this is
Oh yeah.
realistic stuff.
Yeah.
As opposed to just the Moon Boys. You think the Moon Boys are bad on Twitter? Check out some of the Moon Boys on crypto YouTube. It's bad. So I love to see what you're doing with your channel, and that's the point of my channel as well. Is I want to spread some realistic information. What is trading really like? Hey, we're in a downtrend. Maybe don't tell your audience to just buy altcoins. You know what I mean?
Oh man.
And shit
Yeah.
like that. So, but yeah,
Yeah.
really enjoying the YouTube thing.
Man, I appreciate it. You said some great things. I think your experience, it really kind of shows through both in how you talk about the market and how you took us through your own setup. So, hey man, I really appreciate it. You know I do. So,
Thanks for having me, man. Thanks, everybody.
all right, brother. We'll see you on Twitter. And thanks again to Trader Mayne. Everybody loved him. That was fantastic. Wow. We have just great guests, these long form interview series. This was, let's see, that was number 6 in the long form interview series. Check out the rest of them. We'll figure out who I have next. I have a couple ideas as some folks I'm trying to track down. My YouTube, of course, Ched's Trading. If you're new, go to the educational live streams. That'll really help you get started and see how I approach the market, how I define my levels, moving averages, the indicators I use, that type of stuff. I'll do a quick Bitcoin here in a moment, but of course, remember, I am an author of Trading Wisdom, 50 Lessons Every Trader Should Know. You can get that book on Amazon, but it's for free on my YouTube. I just did lesson 12 this week. I'll eventually get the whole book for you for free. You can get it on Amazon, of course, Kindle audio book, hardcover and paperback. The feedback's been amazing. And just again, a quick reminder, I'm a founding analyst at Bitcoin Live, the best in class educational platform. I really put my heart into it twice a week, full market updates. Definitely check that out. Man, Mayne was really good. I really agree with so much of what he said about, and really the things that struck for me the most true, we're kind of knowing what those big levels are and kind of waiting for the price to really flip a level before initiating a trade, before risking funds, because that's what you're doing. You're risking funds, and that's serious, and you should take that process seriously. So kind of playing here in the middle of the channel, as I would put it, what do you do? Where do you define your risk? I think you can pretty clearly be bullish above 40K. I think we're seeing multiple rejections here already at that level. We have the initial thrust above and now back below. We'll see if we can rally here into the candle close. We've got a few hours, of course, till that. We see the initial rejection at the SMA 50. I think you got to be really careful right now, and really precise with your trades. It's not the type of, there's times when it's incredibly easy. And there's times when I've already reached out to Benjamin Cowan. By the way, I've reached out to him. If you know someone, I'd be happy to, but he hasn't responded to me at all. You got, it's just, there's times when it's easy, right? There's times when it's easy. There's times when, like, for example, in the weekly chart, all you have to do is buy every dip, EMA 8, EMA 8, EMA 8, right? That's easy. It's the genius market Mayne talked about, and then there's times like here where you have to be incredibly agile. He talked about all those warning signs at the local top, the up thrust. And then we had all these kind of traps on the way down. People were getting really excited as we bounced into resistance. And we're arguably in that same type of environment now, right? Where you're kind of bouncing into resistance. It's slightly different in that, and for some reason, my EMA 34 is gone on this computer. I'm going to add it back here real quick to make my final point. I don't know what keeps doing that for me. So, the only difference now, the biggest difference I think now, compared to before, is that we have some signs of weakening bear trend. Uh, EMA 34, we rejected here. We rejected here. Now we got above the 34. We got above the 50 briefly. Yes, we've lost it. So there's some signs, that bulls are fighting back, but really losing 40K was a pretty big blow for the bull movement here, at least in the short term. So we need to flip that back up to be confident. Altcoins are pretty rough. There's only a few decent looking ones out there. I've tweeted some of them. Other people are on top of them as well. But I don't think personally this is the type of environment really to be messing around with altcoins, unless we do flip back over 40K. And I think you can start to get more kind of risk oriented at that point. And then again, above 46K, we're flipping that level. I think you can be pretty confident we will flip the 200 and continue on, at least test the 52K, but probably a little bit higher, 58, 59. So that's just a basic test, a basic taste rather, of my thoughts on the market. I love doing these interviews. I love the fact that I can go live anytime and talk to you folks from all around the world. It's just super fun. I really am enjoying doing this. So what I'm going to do is leave with a little bit of music and dancing. I like to dance to make the learning fun, to express myself a little bit, and just to be me. So that's what I'm doing. We've got the music going, and I just want to say thank you. I appreciate each and every one of you for taking some time to listen to me today, and I appreciate all your feedback. And just know that I wish you well, and we'll talk again soon. All right.